In this video, we're breaking down one of the most common questions that people have when buying life insurance. Should you go with term or whole life? Because on the surface, they seem pretty straightforward. One's cheap and one's temporary. The other's expensive and permanent. But the real differences and how they affect you go a lot deeper. What's up, everyone? My name is Eric Hunsaker, and if you've ever felt stuck choosing between term and whole life insurance, this video is going to make that decision way easier. We'll cover the pros, the cons, the real cost differences, and help you figure out which one actually fits your life stage and goals. So let's get into it. What is term life insurance? Let's start with the simpler one. Term life. Term life insurance does exactly what it sounds like. It covers you for a specific term, usually 10, 20, or 30 years. If something happens to you during that time, your beneficiary gets the payout. But if you outlive the policy, that's it. The coverage ends and there's no payout. And because the insurance company knows there's a chance you'll outlive the policy, it's a lot cheaper than whole life. This is why so many people, especially younger adults and families, tend to start here. You're basically buying peace of mind during your highest risk or highest responsibility years. Maybe you just bought a house, had a kid, or started thinking about what would happen to your partner if something happened to you. Term life gives you that financial safety net without the big price tag. Now, there's no cash value, no investment component, just pure simple coverage. But honestly, that's what a lot of people want. They don't want to overcomplicate it. Now, what is whole life insurance? Whole life is kind of the opposite. It lasts your entire life, not just a set term. As long as you keep paying the premiums, you're covered. But what makes it more than just forever insurance is that it also has something called cash value. Part of the money that you pay into the policy doesn't just go toward coverage. It actually builds up over time, kind of like a savings account inside your insurance. That cash value grows slowly, but it's guaranteed and tax deferred. You can borrow against it later in life, use it to pay premiums, or even pull it out entirely, though that can lower your final payout. Because of all that, whole life is much more expensive. Like significantly more. We're talking sometimes 5 to 10 times more per month than a comparable term policy. But you're not just paying for coverage. You're also paying for the guarantee that it'll never expire and that the policy will grow in value. So who is term life really for? Let's say you're in your 30s or 40s, raising a family, juggling a mortgage, and just trying to keep your finances moving in the right direction. Term life makes a ton of sense here. Why? Because you probably only need coverage for a limited time. Long enough to raise your kids, pay off your home, and get your financial footing stable. If something were to happen to you during that time, term life gives your family the protection without draining your monthly budget. It's also a smart play if you just want to make sure that your partner or co-signer isn't stuck with your debt. A 20 or 30-year policy can help cover your income, pay off a mortgage, or help your family handle big life expenses. Another big reason that people go with term life, it's simple. You pay your premium and you're covered. No cash value, no investing, no wondering how the policy works. Just straight up protection. And let's be honest, that's all a lot of people want. Whole life, when it might be worth it. Now, whole life isn't for everyone, but there are situations where it can make a lot of sense. If you've already maxed out your retirement accounts, have a steady income, and want a predictable way of building long-term value, whole life can be a part of that puzzle. It's also helpful for people who have lifelong dependents, like a child with disabilities, an aging parent, or someone who's always going to rely on your support. Because whole life doesn't expire, you know there will always be a payout, no matter when you pass. Another reason someone might pick whole life is estate planning. If you're looking to pass wealth onto your kids or protect your estate from taxes, a whole life policy can be used strategically. And while it's true the cash value grows slowly, it's guaranteed. It won't tank with the stock market, and it's not dependent on interest rates. That kind of predictability appeals to a lot of folks, especially if they're already investing elsewhere and want something more stable. The cost difference. Not even close. Now, here's where it gets real. Let's say a 40-year-old healthy man wants $500,000 in coverage. A 20-year term life policy might cost him around $330 per year. It's less than $30 a month. But a whole life policy for the same amount, that could cost upwards of $7,000 per year. That's more than $580 a month. It's not just a small bump in price. It's a whole different ballgame. So you have to ask yourself, do you want to spend the money on insurance? Or could it be better used paying down debt, investing in your IRA or 401k, or building an emergency fund? For most people, term life frees up more money in the short term and still gives you the coverage you need. Let's talk about the elephant in the room, that cash value. It sounds appealing. And in the right hands, it can be. But for a lot of folks, it's not the slam dunk that it seems like. Cash value in a whole life policy builds very slowly. For the first few years, it might not grow much at all. And even when it does, you're not earning stock market returns. It's more like a slow, steady trickle. Plus, to access it, you're usually borrowing it from your own policy, meaning you'll owe interest if you don't repay it. And if you don't pay it back before you die, the balance gets subtracted from the death benefit your family receives. So yes, it's nice to have a backup fund building in the background, but it's not as flexible or high performing as other financial tools. Can you convert term to whole life? Actually, yes. Some term policies give you the option to convert to a whole life policy later on without needing a new medical exam. This is handy if your situation changes. Maybe you get a raise, come into money, or just want permanent coverage later. If your term policy has a conversion feature, then you can lock it in while you're healthy and decide later if it's worth it. Just know there's usually a deadline. You can't wait until year 19 of a 20-year term to try to switch it over. So if it's something that you're interested in, make sure you know the fine print up front. What about your life stage? If you're in your 20s or 30s just trying to protect your income or support your kids if something happened, term life is likely your best bet. It's cheaper, easier, and still gives solid peace of mind. If you're older, looking to leave behind a legacy, or just want a policy that will never expire, whole life could be a better fit, as long as the premiums are manageable. There's no universal answer here. It depends on your goals, your income, your financial obligations, and what kind of peace of mind you're looking for. So which one's better? It depends. Term life is better for budget-conscious people, temporary needs like until your kids are grown, and those just starting out. Whole life is better for those who want to build cash value, people with lifelong financial responsibilities, estate planning or wealth transfer. But the real answer? The best policy is the one that you'll actually stick with, and the one that works for your life, not someone else's. Life insurance isn't fun to think about, but it's one of the most powerful ways to protect the people you care about. And understanding the differences between term and whole life is a huge first step. Now, if you're not sure what you need right now, that's okay. You can start small with term life and revisit it as life changes. The most important thing is starting the conversation. And if you're curious how much coverage you might need, or you just want to check your options, go ahead and click the link down below and take our short quiz to go ahead and figure it out. It's free and can help point you in the right direction. We'll also have a link down there for State Farm where you can go ahead and look at some of their different options. And if you want to see which other insurance options are best for your situation, we'll leave our affiliate links down below. These are affiliate links, so we earn a small commission when you use them at no extra cost to you. And your support through these links help keep our channel going and allow us to continue to create free content just like this. So if you end up using them, we thank you so much in advance. But other than that, thank you so much for watching, and we'll see you here in the next video.